Hello, today is October 21st, 2015. This is Minesh Patel from Ichimoku Trade, worldwide leaders in specializing in the Ichimoku indicator. Today we're going to go for another great trade review where we're going to talk about basically a unusual option that we found that dealt with China, and we'll talk about exactly what steps we took, exactly what our thought process was, and what our execution and steps are, and show you exactly what our trading plan is. Before we go through all the great details, let's go for a normal disclaimer to state this is for education use only. We're not soliciting your buy or selling particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, so we support various different charting platforms out there, from Thinkorswim, TradeStation, eSignal, and so forth. Here is our contact details, so you could call us or email us for any questions you may have. But let's go ahead and go straight to the to trade. Okay, so one of the things a lot of people talk about is unusual call and put volume. And what a lot of people do is they use the unusual call and put volume to see if there's an advantage on a particular instrument. Okay, a lot of people use them for day trading, but a lot of times you could use these for not just day trading, but also swing trading and long-term position trading. Remember, if you just look at it from a point of view as these are catalysts for the stocks to move up or down, and then you verify everything with a chart, you'll do really, really well. And that's the way we're going to approach it. So what we did was we logged into our website, our trading tool website called ichimokutrade.com. We went over here to our profiles. We selected unusual put volume here. Okay, and let's go ahead and just do that and do it from scratch so everyone could see that here. Now, once I selected that, then I went over to the General tab, and I want to select stocks over $30. And the reason why is that a 3 to 5% movement in a $30 stock or higher will give you a delta, one delta move or so forth, where it'll give you really good value for your buck. So that a dollar move in something that's $30, you'll actually make some money. A lot of people sit there and trade options on stocks below 30, but believe it or not, there's no real big advantage for it unless the stock moves 5 to 10%. What we're looking for is a 3% move to start making us some money, and that's one of the reasons why we select $30 or more. Then what we're doing is we want to change the default settings for over 100K in average volume to 500K. Kind of filter this list down. Okay, so we have a list here of everything out there. You could narrow it down to more by selecting whatever particular instrument class you're looking for, like S&P 500, NASDAQ, and so forth. Okay. The other thing I like to do is, since we're dealing with options, I want to see if these options are cheap or expensive. So I'm going to come over to the column view, select average IV and current IV, and basically what it'll do is it'll tell me if something's cheap or expensive. If my current IV has to be equal or below the average IV in order for it to be cheap or average, and that's kind of what I'm looking for. If I get that scenario, then what I'm looking to do is buying calls or puts. If basically this current IV is drastically higher than the average IV, then I have to look to vertical spreads, whether it be debit or credit. If these words are strange, don't worry. We'll start looking at a chart in a minute. You also have an option, if you don't know anything about options, to go to our product page. We have a very simple DVD that we created for our clients that you can purchase that goes for everything there. Anyway, so this is a list we got. You can narrow it down by increasing the average volume, but in here, one of the ones that we saw yesterday was China, which is FXI. Okay, so this is the one I'm going to look at. If you notice, the average IV, the current IV is 29. This is lower than 31, so this is telling us it's right around the average, a little cheap. So that's kind of what we're looking for. And if you notice, normally you got 1740 is the average call put volume for this, and all of a sudden yesterday this traded 34,000. So this is 34 times basically the average normal daily volume of puts. So this is something's going on here. The question is what? Okay, so now what we're going to do is we're going to go to our charts. We're going to use Thinkorswim today, and we're going to go to our charts here, and we're looking at the higher time frame, so you want to kind of look at things from a higher time frame perspective. And this is a chart from yesterday on the FXI, and you could see here is basically right here at the border condition between basically consolidation or being bullish. It's also at this major yellow line, which basically represents support resistance for 52 bars in each bar equal daily time frame. So this is a major condition right here. So what we're looking for is, out of this list, is basically stocks that are at, it's showing you unusual call or put volume, and what we're doing is we're looking to see if they are at a major support resistance on a daily or weekly time frame. And this one was, so this one has a great potential of going down and possibly coming all the way down here to this green line, at least this green line here. And if you look at it, that's about $2 move. That's about $2.50 move. So that's about $2.50 deltas that you could sit there and make minimum to that point. If it comes and retests this low down here, then you're looking at about $6 move, which is about 6 delta move, and that's exactly what we're looking for. Okay. So now one other thing is that this is an ETF. Okay, so one of the things with ETFs we want to do is make sure that these ETFs are following the underlying product, because sometimes these ETFs are distorted and they really don't follow the underlying product at all. So this was dealing with China, so we went to eSignal. And at that point, and I'll show you a snapshot of the current chart today, this morning, since the China market is open. This is a 240-minute time frame here. You could see it was basically butting against this resistance here. That yellow line yesterday is when we took the trade. And this morning, we're going to wake up with FXI going down. And you could see that this has gone down already overnight while we're woke up, while we're sleeping. And you could see the different support levels here for the actual index here. So if you look at FXI, it's going to open up a lot lower due to the China stock market going down. You could come over here to the trade tab here. You could look at the bid and ask. You could see yesterday was 39.43. This morning you could see it's going to open up lower. You could see volumes already in here where it's going to open up about 43 cents lower. Okay. Now, if you look at it, what we did was we found the option that a lot of that was traded yesterday with that huge unusual put volume, and what we did was we noticed that basically all the volume was around 37 puts. So basically whoever bought the option, and they spent over $1 million in that option, they basically were betting on the FXI getting below $37 a share by basically expiration in December. And that's basically the option we looked at. We noticed basically it was cheap or at average price, so we basically entered the same option too, and I'll show you that exactly on the risk graph here. So this is showing you one contract here that we basically entered. You could see that we risk $89 here, and you could see the upside potential here. So at most you could lose is $89, and if you look here at the delta here, for every dollar move it goes down, we're going to make $28 here. Volatility hopefully will increase too as a price goes down. If it does, we're going to basically get an extra bonus of $5.33 for every time the volatility moves down a percentage. Here's the actual position for one contract here. Let me show you the trade. You can see exactly when we put this on yesterday. This was at 8:50 Central Time. So this is right around market open. We basically bought it for about 89 cents, and basically it should sit there and go down today. So this shows you the trade here that we entered. Okay. Now this is a very simple trade here, that you could sit there and engage. And it all started with unusual put volume or call volume. A lot of people will sit there and day trade off these information, but what we like to do is sit there and look for them for more towards swing trading and long-term. Reason why is it's a great catalyst for the stocks to move up or down, and might as well take advantage of it for a little more longer period. That way we can get a good reward risk ratio. Okay. Hopefully you guys enjoyed that one. If you guys have any questions, feel free to contact us here. A lot of people do ask us, how do I find out more information on how to do all this stuff? You can sign up for a free 30-minute session on how to use our website tool, so you can see how to use the unusual call input volume scanner. And then if you don't know anything about options, you could go to our product page. There's a simple DVD that goes for everything that you need to know that's available too. Hope you enjoyed it, and have a good day.